the misconceptions around the financial trade-offs that really hold us back from making progress. So whether that is sustainability or whether it's social impact, I think there's so much more that we can be doing.
You intentionally put yourself in a position where you were going to be exposed to multiple founders and business leaders. It's going to lead to opportunities.
You're getting a paycheck and you can put food on the table and, a roof over your heads and your family. Then, beyond that, the biggest source of motivation for people is a connection to a deeper sense of purpose. Looking at retention and recruitment, there's a cost to employee turnover. If an employee leaves, I think Gallup data shows it being kind of up to 200% of that employee's salary is kind of the indirect cost on the company. This assumption that sustainability, social impact are costs for a business, when actually they are investments.
So I'm really excited today to welcome Paul King, who is a chartered accountant turned startup CFO turned fractional finance leader turned founder of Towards Better. Yeah, a bit of a mouthful. But you started your career in the Big Four, is that right?
Yeah.
And then has worked for some really high growth startups and some of the world's biggest brands, including advising Starbucks Europe on their sustainability strategy. But what sets Paul apart is his belief and lived experience, really, in how purpose and profit don't have to be in conflict. And he's on a mission to help founders and finance leaders build businesses that are better for people, better for the planet, but also better for the bottom line. So welcome.
Thank you. Yeah, I'm excited to be here. Yeah,
thanks for joining.
Been looking forward to this.
Yeah, me too.
Had a lot of great guests, and so very happy to be here and to have this conversation.
Yeah, absolutely. I mean, if I could pick someone who's more aligned to the whole ethos of this podcast, I think I would struggle because what you do is very, very well aligned to what we're trying to explore on the Conscious Finance podcast. So thanks for coming along. And I guess getting straight into it, really, with your career journey, it's fascinating, and it's not something that is typical, really, of what you see the traditional finance route. And is that what you wanted to be when you were a 6-year-old?
No, is the straight answer. And I question whether there's many 6-year-olds out there that really dream of being an accountant when they're older. I wasn't one. And so maybe I think that probably has pushed me to try different things and to take some of the risks that I have. And it's been quite a roller coaster ride from $1 billion boardrooms to the trenches of tech startups. But it's been a lot of fun and learned a lot along the way.
What do you think drew you to finance particularly?
Being offered a job initially. Yeah, I was always just naturally good with numbers and enjoyed understanding how things worked, kind of on an analytical level. Science was kind of where I really got drawn towards at school, and then I did biochemistry at university. Although quickly realised I didn't want to spend my life in a lab, so I then did a master's in just a kind of a general business degree, and learned a lot more about the real world beyond science. And this was during the recession.
Okay.
The global financial crisis. So I kept hearing in the news about the credit crunch, and I just thought it was like some new breakfast cereal that's coming out. And when they kept talking about HBOS, this bank that was failing, I honestly thought they were talking about. I was getting mixed up with HBO, the American TV. And I kept thinking, why is this so important? So I knew nothing about the real world, and just started applying to just general management grad schemes.
Okay.
And I thought I'd probably, I'll be lucky to get a place, because all these big companies were cutting back because of the recession. And but I actually got offered a place with Lloyds Banking Group.
Okay.
So I joined the grad scheme there, and I really enjoyed it to begin with, and then over time started to realize that, I think there was, only a certain amount of time that I wanted to stay in the corporate world before then looking to something else. So startups was something that always really interested me. And I always thought that, one day probably I'll look to start my own. So that was my mission really. When I was in working for those big companies earlier in my career, I set myself the goal of find the jobs and the roles that will give me the most exposure to different leadership teams and founders, so I could just understand as many different companies as I could. And understand what works, what doesn't, why do some companies succeed and others fail.
So you always had that destination in mind?
Yeah. It was always something that attracted me. I think it probably dates back further, but there was a unit on entrepreneurship in the masters that I did. And I think that really kind of sparked my interest in it. But it did seem very distant a lot of the time, being in the corporate world. And so it was kind of a meandering path towards it. But I definitely did. The strategy or my mission definitely did work. I was lucky to have some really good roles where I could work really, really closely with different management teams. So nature of the time that I found myself in, the aftermath of the global financial crisis, in these events there's often opportunity, as difficult as they are. And so for me it was it was a very unique time in terms of just the scale of difficulties that big companies were facing. And so the most exciting part of the bank for me to working at that point in time was restructuring. And so I managed to get a full-time role after the grad scheme, where I worked with private equity-backed businesses, very big companies between 50 and 250 million pounds of debt that were really kind of on the edge of toppling over. And so I was given loads of responsibility, still kind of just a few years out of university. And I would, have to sit down with, serious, proper grown-ups, management teams of these massive companies facing really serious problems, and hundreds of jobs on the line. And my job was to work with them to plot a route through that and to come out the other side. So had a lot of exposure early on to that, and then the next couple of roles were kind of similar. So I moved to Deloitte. That's where I qualified. It was at the corporate finance.
So within Lloyd's, was that more general management and general sort of business operations, or did it have a finance focus as well?
It was definitely finance focused. So this is all about, Lloyd's was a lender to these companies, and it was about how can they how could Lloyd's support the company through so that long term it could then recover as much of its debt as possible. And just the nature of these companies being private equity backed, going through an insolvency administration process was not going to be a good result. And so it was always about backing management with a turnaround plan, and often even putting more money in. So you really had to be sure that it was the right plan. So there was an awful lot that did come down to the numbers and the analysis, but everything obviously, that supports that and sits behind it is all the different aspects of a business. And so I mean, that really appealed to me, always, as I've seen myself as more of a generalist. And so needing to understand, the market, customers, and all those other aspects was an important part of it.
It's really interesting how you thought that early on in your career to position yourself for the future, building that sort of business acumen, that commercial awareness, that putting yourself in positions where you're going to have access to multiple different business models, different founders, different organizations. And I think that's probably quite useful advice for young people out there today who maybe don't know where they want to go, but they do want to do their own thing eventually, or have their own business. And I guess in a similar time where we're in a bit of a economic shitstorm, for want of a better word. And the big firms maybe haven't got as many opportunities for young people as they did. So seeking out that type of opportunity is probably quite good advice for.
Yeah, I think there's always transferable skills, and I think some of the pearls of wisdom, in terms of careers advice that I heard early on was about thinking a few steps ahead, and often it's not a case of you just being able to make one jump into what you think the perfect role is. It might take a couple of steps to get there, and it's just about trying to break those down. And often it doesn't really matter, what if you're in a different sector to where you want to be, or you might be in corporate and you want to be in a startup, or it could be the other way around. And it's more about just understanding what skills are important and how can you seek those out.
Yeah. And then after the Big Four?
So I moved from Deloitte to BDO. I joined the mergers and acquisitions team there, and that was great. I really enjoyed it. There was definitely a big difference moving from the Big Four to a slightly smaller firm, and definitely from going from restructuring to to mergers and acquisitions. So working with founder-led businesses that were really, really successful, and they were just at the point of of their first private equity transaction or an exit. And yeah, really enjoyed that. I had a really interesting mixture of a role between being based here in Bristol, and so looking after kind of the southwest generally across all sectors, and then I was also working with the national retail and consumer team. So that kind of took me across to London quite a bit and worked on some really interesting transactions there, and yeah, definitely learned a lot there. That is now, I work with a lot of early stage businesses, which we can get to. But there's again, talking about transferable skills. There's an awful lot in terms of how you would run a mergers and acquisitions process, a sale of a company, and how you can apply that to very early stage fundraising. So yeah, I was fortunate enough to have some really, really good mentors and learn a lot along the way, and it was there that I had the opportunity to make that leap into the world of startups.
And how did that happen?
So it was actually a client, and we didn't do very much of it, but we were helping a company with an early stage round, with a fundraise, and yeah, so I got on really well with the founders. I was working very closely with them for a while on this fundraise. A company called Pentatonic.
Oh yeah.
And yeah, they ended up making me an offer that I couldn't refuse. It was just the perfect opportunity for me. Like I said, something I wanted to do for a long time, but it was also a business, and a part of the market that I really wanted to get into. So Pentatonic has gone on to become a real pioneer of the circular economy. So sustainability. How do you close the loop between the outputs or what might be waste of a business, and then recycle that and turn that back into inputs, and also thinking about how do you extend the relationship with customers, and so bring them back into stores, or to buy more things, trade back products. And so they continue to do some amazing work in that space, and yeah, it was a risk joining them at that point in time, but I just knew it was the perfect opportunity.
Did it scare you?
I don't think it scared me as much as it scared probably the people around me. I think probably friends and family, and even some of my mentors through previous roles that I had kind of asked them what they thought about it. A lot of people were maybe urging caution.
I came from a big corporate, quite structured environment into startup chaos, roll up your sleeves with a bit of everything. Must have been a bit of a culture shock.
It was. It was. I think it was something I was really looking for. I'd always felt that startups would be a very good home for a generalist, and I always thought myself as more of a kind of a generalist than just someone that would only want to do finance. That definitely turned out to be the case. I've always had the opportunity to get involved in, all across.
I've seen your Canvas skills. Pretty snazzy pitch decks you've built there.
Yeah.
You've got a really, really good creative side as well as the numbers, I've noticed.
Yeah, I think that's that's something that I've learned throughout probably at BDO and then definitely at Pentatonic as well. Because we worked with retail and consumer brands when we put together the IM. So like a bigger version of a of a pitch deck. We would always put a lot of effort into just making it beautiful and it representing the brand, because the brand would often be a big driver of the valuation of these businesses that we were helping the founders to sell. So we actually had an agency, like an in-house agency that would help with the design of those things. So I think I learned a lot there, and then particularly at Pentatonic, Jamie, one of the founders, had a background in brand marketing, communications at Nike and other big businesses, and he was brilliant at those things in terms of how even a really, really early stage company could look and feel like an established brand. And that made a big impact at Pentatonic. And so, yeah, I think I learned it from there. And it's something I encourage, even early stage founders I work with. I think how a pitch deck looks is almost as important as what's the actual content inside it, because investors will skim through it, like a 90-second skim through a pitch deck, and so kind of how it feels and how it looks, even if they won't say this, it does have a really important effect.
Yeah, love that. So it sounds like Pentatonic was almost stars aligning, that they were a client and it led to an opportunity. But not only did it lead you into the startup space, but it also led you into that purpose space where you're working for a business that is a real force for good. Was it that move that sort of spurred that passion in you, or is that something that existed before that maybe you weren't scratching that itch and the stars just aligned in the right way?
Yeah, it's a really good question. I think there's different. There's a few different things there. So for a long time, I really had this drive that I wanted to be doing something that made a difference. I think just the nature of being in banking, during the recession and in the times of banker bashing in the press, and when we had induction for the grad scheme, which is basically like a corporate version of a freshers week, we were hidden away in a Premier Inn in the Docklands, and all of the kind of the usual swag and stuff that you're given was not branded, and there was even kind of jokes about. Because I was at Lloyd's, and they said if the press ask you who you are, what we're doing here, just tell them that you're from RBS. So it was just operating that environment was, I think, must have shaped it. And there was one particular moment that, in hindsight, I think has really stayed with me. And so you might remember the Occupy movement. So it started on Wall Street, where people just were camping out in tents on Wall Street, and they were protesting against the kind of, the injustices and the inequality, and how, the system had collapsed, and those that had caused it didn't really suffer any consequences, and, the whole 99% thing, like we are the 99%. And that had really captured kind of the imagination across the globe, and it had very much spread to London. And so there was Occupy St. Paul's, so they were camped out outside the London Stock Exchange, and I was really, really fascinated by this. I mean, at the time, it felt like the system was on the verge of collapse, like around me. I was inside it, and I found it exhilarating. Other people must have just been worrying about, the security of their job and things. But for me, it was like living through a film. It was great. And so one lunchtime, I decided to walk down to the camp. And it was a cold, wintry day, but I left my jacket on my chair, and I took off my tie and shoved it into my pocket so I wouldn't be kind of seen as the enemy when I got down there. And I was just blown away by it. It was like a city. They had a university with a whole library of books. They had a program of lectures that would go throughout the day.
Wow.
Every day. Yeah. There was a canteen serving meals. There was even like a hairdresser's.
It's a very civilized protest.
It was.
Yeah.
And so it really stuck with me. Just the momentum that they were able to gain, but ultimately it kind of fizzled out and didn't really, it felt like it didn't really come to a conclusion that they were driving for. And I think they were great at articulating the problem, but didn't really have a clear solution as to what needed to be done. But it was very much that sense of purpose that really bound everyone together and kind of and drove that momentum. And so going back to the office and sitting down and at my desk and putting my tie back on and kind of looking around me, and it was stark how lacking the sense of purpose was there. But of course there was all of the planning and the structure and everything. And so I think that's probably where the seed was first sown, in terms of you need to have both of those things. You need to have you need to have a sense of purpose that really drives you, but you need to make sure that it translates into commercial and financial success for to really sustain it.
So that must have sparked something in you then, that whole just going through that experience.
Yeah.
Do you think there's something deeper from your childhood and upbringing that made that happen?
It's a really good question. It's something I've asked myself a lot, and at the moment I don't really have an answer for it. Yeah. I feel like there must be something, because it has been something that I've always felt a deep drive to want to do, to contribute something positive.
Yeah.
And to make a difference somehow. But I'm not really sure exactly where it comes from.
Sadly, I'm not a hypnotherapist, but we could dig into that if you like. But no, it must come from somewhere. I always wonder the same for myself, because, similar story, but in a different context. I was big global corporate businesses, and the longer I was in there, sort of looking around four walls and thinking, there's got to be more to the working world than this, and in a world as a listed organisation, it's all about shareholder value, and it's not their fault. It's just the structure, and they have to please their shareholders. But yeah, I had a bit of an awakening, really, just when, combination really probably of having Esme and thinking, what world is she going to grow up in?
Yeah. And
then equally then pandemic, a lot of time sat on your own, looking at four walls around you, thinking, what am I doing?
Yeah.
And I took a lot of deep reflection, thinking back, what do I want to do? What do I want to build? And then looking intrinsically in terms of my values and what I cared about. And the only conclusion I could really come to is I've got my mum to thank for it. She was raised me as a single parent, and a lot of her values and my values that she's basically passed on and instilled in me. But I haven't managed to pinpoint a single thing.
Yeah. Well, I think that in itself is a great answer, a great source of inspiration.
Yeah, definitely. So getting on to your journey from there, then you joined this startup. Did you go straight as a CFO, or did you climb up to that?
Yeah. So I was finance director to begin with, and then
so you went straight from M&A to FD.
Yeah,
because that's quite a different role, isn't it?
Yeah, and I was. I think that the bit that worried me was about going into it was like the operational side of finance and accounting software that I had never touched before. And so that
had you ever pulled together a set of accounts?
No, not myself. My roles was always the analysis of them. And also I hadn't been an auditor either. I'd always done corporate finance roles. So that was that was something that did worry me quite a bit. And I spoke with the founders about it, and I was lucky that I had a really good relationship with them. And they reassured me. They said, we're not hiring you to be a bookkeeper, and we know that your strengths are going to be in other places. So don't worry about that. We've got that'll be covered by other people in the team. So.
Okay, so you had a bit of support.
Yeah, yeah,
Right, that's good.
yeah. And so I think actually that it's probably, for anyone who's thinking about making that jump into an early stage company or a smaller company, um, it that does tend to be the way that those more operational aspects of finance are kind of are covered. It's kind of those are skills that will usually exist within a company.
Or an outsourced accounting firm
Yeah,
that could do the bookkeeping
yeah,
and
that's right.
management accounts.
Yeah, they're kind of they're quite easy things to find, and so really it's that strategic or it's the commercial insight that you can bring that really adds value and will probably be where you would be comfortable adding value if you've come from a larger business.
Yeah, but I think your story demonstrates just the importance of relationships because if you had somebody in M&A doing the role you were doing, applying to an FD advert or job externally with no existing relationship, you probably wouldn't even get an interview.
Yeah, potentially. Yeah. Yeah, I think, as I was thinking back about, my journey so far and the steps that I've made and particularly the bigger jumps. And I think to the people on the outside, or even people that know me, they seem like very big risks, but I think to me they're not. And it's often something said about entrepreneurs is that they're risk takers, but in reality it's they're able to assess the risk more accurately and find ways to mitigate it. And so through their insights or a piece of technology they've built or their distribution and routes into customers or whatever it might be, they're actually able to to reduce that risk. And so from the outside, it seems like a massive risk, but to them it isn't. And so I think that's kind of been the case. I think a lot of it feels like through luck for me, but I think with joining Pentatonic, it didn't feel like such a risk to me because I was very close with the founders and the business, and I had that opportunity to have that the honest conversations with them.
It sounds like luck, but you often make your own luck, don't you? And I think if you go back to the beginning of your story where you intentionally put yourself in a position where you were going to be exposed to multiple founders and business leaders, that's going to lead to opportunities.
Yeah. Yeah.
You're building your tribe early, which I think a lot of people don't necessarily see the value of their tribe or their network soon enough, and the connections that you make and how they often lead to the next thing. I can say the same about my career. I don't think I've ever applied for a job. Everything's come from knowing somebody, a referral or a friendship.
I mean, it's that cliche about the best jobs aren't often advertised.
Yeah.
And yeah, I think I think that would be the case with me as well, particularly in probably the second half of my career. And yeah, I think even when I was, there were times where I felt quite disillusioned with the corporate world, and I thought, okay, just enough of this. I need to now go off into do other things. And even if I at the time I probably felt like I was going to do something very different and would leave this behind. Actually, a lot of the contacts that I made back then have stayed with me and have kind of come back round full circle, and people that have continued to be really helpful, really supportive. And so even I guess that one of the messages or piece of advice maybe to people early in their career is that even if you feel like you are going to move on into something very different, don't underestimate the power of the relationships that you build at any point in time.
Yeah, definitely. Love that. And getting on towards Better. So you founded that when?
About a year and a half ago, and it has a lot of early stage businesses it's gone through some pivots and has kind of had a couple of changes in focus and so on. But yeah, about a year and a half ago.
And what's the why behind that?
So that is really, how can I use the skills and experience that I have amassed over my career and then put that towards my this drive of wanting to have a positive impact. And so the other part to the question that you asked me just now about where does that come from, the kind of the Occupy story is one, maybe like a deeper one, but on a more practical level, I think when I was with Pentatonic, and I was, really enjoyed getting involved in the client work that they were doing. So supporting these massive Fortune 500 companies to to get closer to their net zero targets by being more sustainable, devising solutions to the specific challenges that they faced. And we were revising Starbucks, and it was in the middle of the backlash against single-use coffee cups. And so this is the days of the Attenborough effect, the latte levy. It was in the press all the time, and from all corners, the general public, the press, the government, everyone was demanding that a solution, that there's that these major coffee chains could become more sustainable. And so we were working with the leadership team of Starbucks Europe, and we had a load of initiatives and detailed blueprints about how they could become kind of more sustainable and solve this challenge. And despite the pressure they were under, there was initially a hesitation to actually move forwards and proceed. And it became clear that it was the financial side of things that was causing this hesitation. And so a big part of my role was to then demonstrate how these programs that we were going to implement would not only help them become more sustainable, but also would increase shareholder value as well. Mm-hmm. And this is a pattern that I had seen repeated over and over again since then, that it's the misconceptions around the financial trade-offs that really hold us back from making progress. So whether that is sustainability or whether it's social impact, I think there's so much more that we can be doing, and this is the biggest barrier to making progress. And particularly having been in kind of the climate tech space, the technology we have, we should be doing so much more already. And so for me, it's not so much a technological problem as it is a decision-making problem. And often it just boils down to the numbers and people thinking that the numbers don't work and this is a cost, when in fact it's an investment. And so having spotted that pattern, it was something that I wanted to help more companies to overcome and show that purpose and profit can go together.
Yeah, and I think that's really important, especially right now. I think with when I founded Core 3.5 years ago, the world was making quite good progress in terms of opening their eyes to the importance of conscious capitalism and the concept of the triple bottom line and the B Corp movement and business for good, whatever you want to package it up as. ESG initiatives were all progressing and actually having a bit of meaning, but feels like this year, thanks to one orange-faced man, a lot of that has been unravelled. DEI initiatives being shelved, ESG initiatives being shelved because one global leader doesn't value it.
Yeah. There's no denying the kind of the macro environment that we're in has definitely shifted those things down the corporate priority lists. So whether you call it ESG or CSR or DEI or whatever it might be, it definitely has kind of fallen down the to-do list a little bit. I think what interests me and I think can very much be part of the solution to this problem is that a lot of it is actually driven by these same misconceptions around the financial side of it. So this all comes from ESG and particularly, DEI, diversity, equity, inclusion, being heavily politicized in the US. And a lot of that comes down to this conflict between doing business the right way and being profitable, and this concept of of shareholder primacy, or the profit motive, that companies exist and the purpose of a company is to make profit for its shareholders. And that in itself is, that's a whole rabbit hole we can go down into, and whether or not that interpretation of that actually is correct or not. But the opportunity is, of course, to show that actually these things, doing business in the right way, can actually make a business more profitable as well. And I think deep down, the market, CEOs, are realizing this, and they do believe it. It's just a case of understanding how to go about putting it.
So in your view, what is the business case for being more of a responsible business?
So I think there's a few aspects to it. If you look at sustainability as an example, I think long term there is no question that there are such risks that there is very much a long term kind of financial reason for investing in these things now. There's and then but for me, what really drives me, I think, is more the human side of it, because that's also some way where you can see the results much more quickly and more tangibly. So, I think people want to work for companies that are doing something positive. They want to feel good about the work that they're doing, and assuming that you're getting a paycheck and you can put food on the table and a roof over your heads and your family, then beyond that, the biggest source of motivation for people is a connection to a deeper sense of purpose. So there's lots of big studies that show that that is connection to a sense of purpose is the most effective long-term driver of kind of motivation, employee well-being, employee engagement, whatever kind of term that you want to choose. And then that obviously has links into performance and financials. So if you ask any probably any CEO, he said, if you have two employees who are equally skilled and experienced, one is happy, one is not happy for whatever reason, which one do you think is likely to perform better?
Yeah.
And then that obviously then links into you would see that on your P&L. So it's really just about understanding the linkages between these things. And actually, last year there was a special report in the Financial Times on this very topic, and one of the articles within there had a headline that said, "Firms with happier staff have higher profits." And so, for me, it was a really encouraging sign that a publication like the FT is not just running an article on it, but a whole special report dedicated to the link between employee happiness or well-being and profitability. And so, I think it's becoming increasingly more mainstream that we should look after our staff. We should have happy employees, and that will drive performance. And I think where perhaps the link isn't so well understood is about how actually a connection to a greater purpose and sustainability, social impact really is the strongest driver of that.
And is there any data to back that up, that having that sense of purpose or fulfillment in your job day to day leads to more happy, engaged staff? There's loads of data points out there. There's also I can give some some personal examples from the companies that I've worked with as well. To start with, I think it's worth recognizing that as of this year, Gen Z and millennials now make up the majority of the workforce, so just over 50%. And for them, this is having a connection to a purpose at work, working for a company that is making a positive impact is a non-negotiable for them. And so there was a Deloitte study that showed 89% of Gen Z and millennials will say that that's the leading factor when they make decisions that in their career. Then in terms of how purpose then links to well-being and then how well-being influences performance,
So there was this big study that underpinned this Financial Times special report, and then kind of buried deep within there, I went through all 45 pages of it. There are these 6 different pathways that they kind of summarize as being the operational links between well-being and performance. And so the first one, I guess the most obvious is productivity. So if staff are happier, they're going to be performing more efficiently and more effectively. And this is something that I've seen myself. So one of the companies I've been working with, it's a high-tech manufacturing business, and often one of the big question marks is, okay, we accept that maybe for people that are at the top of organizations are going to be bought into vision and all of this kind of stuff, but does it really filter down? And so in this particular project that I was working on with this company, we looked at there was a lot of underperformance in the shop floor staff, the production team. And so a big test of whether you could use reinvigorate a sense of purpose, a sense of connection to the rest of the organization and to a greater purpose, and would that result in higher productivity and greater performance? And we were able to show that it did. Even with people that are on the front line of a business, they're paid on hourly rates. That a lot of people will say that's kind of beyond the scope of how influential this could be. And so we went through this big program of really investing in the onboarding experience, much more regular team briefings, connecting their day-to-day roles with the vision and kind of the long-term direction of the business, and understanding how important their roles were in the business as a whole. And so doing these things just transforms the performance. And being in a manufacturing environment, you're blessed with having lots of data to study, and so productivity went right up, outputs were up, the QC pass rates were up, wastage was down, and ultimately this ended up increasing margins by 32%.
Wow.
Yeah. And so this is something
that's huge.
Yeah, it's huge. And think about that ROI, because these aren't things that it's not like a capital intensive program doing this. It's like a culture initiative that finance people will often think of as being one of these it's one of these intangible kind of warm and fuzzy things that appear nowhere on their Excel model apart from the cost. And so this really, for me, I always encourage companies to think about how can you don't see these things as a cost but as an investment. And how can you identify the links between this, this initiative, if it's well-being or if it's culture, whatever you want to call it, what impacts might there be on performance? And that will look different across different teams in a business. And then, and then from there, it's easy to then think about how does that influence your financials?
Yeah, definitely. I think I can resonate a lot with that as a purpose-driven business. There's benefits there that I didn't even think of. We did it because it's aligned to my values as a founder, but actually the knock-on commercial benefit is just surprised me with regards to, first of all, the talent acquisition. It's really, really hard to find experienced recruitment consultants that are any good, that will move from one place to another, because they're usually tied into big bonuses or whatever. And in the first 3 years, I've been able to attract more experienced consultants than I did in 10 years in a big global corporate.
Wow,
which is crazy. Awesome. Then from a customer acquisition standpoint as well, I'd probably say 20% of the customers that choose us because we're purpose driven and we're a B Corp. And that's. But the majority still care about the quality and the delivery and what we do, and the pricing comes into it. Like, there's still those standard decision-making processes that you'd expect, but even for that 80%, it's probably builds trust because we care about what we do. Yeah. We're a responsible business. The purpose runs deep, so that then translates into our values and our behaviors and how we treat our customers as well, and with honesty and transparency and all that
Yeah.
knock-on effect. So it's probably more than
drives the results.
Exactly.
It's all linked.
Yeah, and then it, from a cultural perspective, internally, like bringing those values to life and turning them into meaning, just creates more fulfillment day to day for the people working here. It's had such a great impact on the culture.
Yeah.
There's so many things which I haven't yet had time to measure or put facts and figures on, but I think it's quite incredible, really.
I think it's I think you do it so well in terms of making that sense of purpose really, really clear, and it's not, and it's not just talk either. You stand behind it through good times and bad, in terms of your support of nonprofits locally, and I think for me, what the biggest indicator that of a strong sense of purpose in a company is that it resonates throughout. It doesn't matter who you're talking to, and I see it through, speaking with different members of your team, or even just seeing their posts on LinkedIn, even if the guys that I haven't met yet, and it's like the same voice and the same level of enthusiasm that you have just comes through all of it, and obviously that is going to then translate into doing a better job, serving your customers better, and finding just the right match in terms of the right person for the right role. And you guys, your performance and your stats are way ahead of the rest of the market.
Mm-hmm. It's very kind of you to say, Paul.
Yeah, well, it's I think it's a great thing, and you're doing it you're doing it the right way, and I think it's just it's another proof point that shows that you can do business the right way, and you can also be commercially and financially successful as a direct result of that, not in spite of it.
Yeah, and that happiness bit really resonates with me. What you said is that anybody can relate to that, because if you're sat at your desk and you're a bit grumpy, you're not going to do your best work, are you?
Yeah.
Whereas if you're happy and fulfilled, you're going to go beyond the job description. There's like that discretionary effort, those things where you might just push the dial a little bit further, or go that extra mile for your customer, or work a little bit later sometimes if you need to. There's just like there's just more motivation and drive there generally. But if you're not happy, you're just watching the clock.
Yeah, absolutely. It's such a big factor, and it makes sense. Like I say, if you asked that question to a CEO, the two staff equally matched, one happy, one unhappy, everyone would say, of course, the happy one's going to perform better. And this is something that the markets know this. There's really interesting research that was in this FT special report about how they did this experiment of creating a well-being index, and so they looked. At the start of every year, they would pick 100 stocks of companies that were named on the best places to work list, and they'd invest $1,000 in each of them, hold it for a year, and then rebalance again at the start of the next year in terms of the 100 companies that are on that best places to work list. And over the course of 3 or 4 years, it was shown that this index or this portfolio outperformed the S&P 500, so just a general stock market index, by 14%.
Wow.
And there's other studies that show that after a company is named on a great place to work or best employer list, there are a few of them, a few of these kind of badges. There will be an almost immediate bump in the share price of these companies. So this shows that the market is pricing this in. So people who are just driven by purely financial metrics, traders, are factoring this in, and they know that happiness is an indicator and a driver of long-term financial performance. So it's a question of why aren't more firms really committing to this. There's a couple of stats that 87% of CEOs believe that that employee well-being is a source of competitive advantage, but only 33% actually make it a strategic priority. And so I think it's
because it's not that immediate benefit. it's not short term enough sometimes. I think it's seen as a big effort, and it's a longer horizon than typical business decision making.
Yeah.
But you're right, it's just so worth the investment. I think there's loads of data around the B Corp movement as well, isn't there? How that B corporations grow faster and are more profitable than other businesses of a similar size that aren't.
Yeah.
So yeah, I'm hoping today we can get that business case through to people's minds and to have more organisations that are a force for good in the world, because I think that's the way that the businesses need to go, really.
Yeah, and I think a lot of the responsibility actually falls on the shoulders of finance professionals as well. I think that's a really important point to make. These, often around, the board table, finance might sit on the opposite side from marketing or HR that really wants to implement these initiatives because it's going to help attract and retain the best staff, or customers love this, and so it's about how do you build the bridges that link these things that might be intangibles. So if it's employee engagement or retention or brand equity, how do you translate those into things that you can then see on a P&L, or firstly measure with KPIs and then obviously translate into financials. And so looking at retention and recruitment, I think it's quite well known now that there's a cost to employee turnover. If an employee leaves, there's I think Gallup data shows it being kind of up to 200% of that employee's salary is kind of the indirect cost on the company.
Well, yeah, recent REC data, which was backed by I think it was Deloitte or PwC data as well, shows 3 times their salary.
Yeah.
It's a huge cost.
Yeah.
There's all the hidden costs as well.
Exactly. Yeah.
Onboarding, training, leadership time, loss of productivity of the team around them.
Yeah.
Then when they leave, as the team is stretched, then you might have more retention issues further down the lines. Just so many snowball effects.
Exactly. And so all of these costs are there. They're just hiding on the P&L, and they're not being linked to what's driving it. And so, okay, we didn't hit our targets this month. Why was that? Because we're short of 1 or 2 members of the team because they left. Okay, and usually you stop there. It's like, okay, why was that? And so I think it's always possible to connect the dots and to figure out what is driving it, and usually it is an intangible factor like well-being and connection to purpose. But that will then be influencing things, performance that you're tracking already with KPIs. And so it's just a case of connecting the dots between them. And so, I often think as, a finance professional, you're often building these forecasts, and, you might be putting in a cost for something that is, the new HR culture initiative. Okay, what's the budget for that this year? But think about what's on the other side of that. What if it's not a cost and it's an investment? How should this be influencing performance? And how can we measure that? And how can we understand and quantify this link? And then you can start putting a financial ROI on these different initiatives. And and then it transforms this happiness thing from something that CEOs think is important but never get around to being something that they need to crack on with.
Love that.
They'll know what the ROI will be.
Love that. And we haven't quite had time to get through your sort of capital for impact side of things either. And I know that's another area that Towards Better are helping clients with in terms of fundraising in quite a difficult world. But I guess with that, what advice would you give to founders or CFOs, FDs trying to raise in this climate?
Yeah, it is a challenging time to raise for early stage companies at the moment. So I think my advice would depend upon whether you're earlier stage or later stage. And so I think later stage companies, and I work with companies kind of across the spectrum. Later stage companies, I think, think of a fundraise as your plan B. Okay, so you need to figure out other ways to extend your runway, to hit the milestones that you need to hit to implement the strategy that you believe is the right course for your company, but find other ways to to unlock the capital to do that. And so that could be within your working capital, particularly in the terms, payment terms of customers is often a great one. Particularly innovative companies that are doing something different, you should be able to negotiate better payment terms. There's also a lot of alternative debt funding out there at the moment. So if you approach it that way, you're in a very strong position. If you don't absolutely need the money, that's the best place to be in. And then if you go through a fundraise, then you then have a decision to make as to, okay, do I switch to this being my plan A? For early stage companies, you need to recognize that fundraising really is a numbers game. There's no getting around it. You need to be going out to 100, 150 different investors that you've already filtered and made sure that are a good match for your business and are looking to invest in companies like yours. And you also need to get warm introductions to at least half of them. And so someone that can make a connection, that can introduce you. And this goes back to what we were talking about near the beginning about the importance of contacts that you make throughout.
150 is a lot.
It is. It really is. And a lot of people don't recognize that. But, you need to think of a fundraiser as like a sales funnel. Okay. And so, if you're going out to 100, 150, then, how many of those you're actually going to get a response from? And that's why warm introductions are so important, because you get responses and you get quick responses as well. And so that means that you can cluster together the first round investor meetings that you'll have. And then you start moving all of them through the funnel, through the process, kind of in lockstep. And what that does is it makes sure that you build momentum. And for an early stage company, that's so important in a fundraise, because investors have to feel like this is something that they can't miss out on. And so
it breeds sort of healthy competition as well.
Exactly. Yeah. And this is one of the things that I mentioned about from my days in M&A, where it's, these are very well established, very successful, profitable companies, but the same approach holds. You run a competitive process and you move everyone through it at the same time so that you get multiple offers landing all at the same time. And then you've got that competitive tension and you can start pushing up the price.
Love that.
And the same holds for an early stage fundraise. If you have to start with such a big number, because early stage is really difficult. And that's a number you want to start with, or you have to start with, if you want to have, a handful of term sheets at the end of it. And really that's the position that you need to be in if you want to, get a good result, if you want to be able to choose, okay, which investor do I want to partner with?
And is that where somebody like you comes in that can facilitate those warm introductions? Or would you recommend people go and find them themselves?
So it's really, really important that founders don't try and outsource a fundraise.
Okay.
As time consuming and distracting as it can be. You want to be running the business. There's so many things that you need to be doing. And a fundraise just does, it takes a lot of time. But it doesn't take as much time if you know exactly the things that you should be doing. But it doesn't send the right signal to investors if you're outsourcing it to someone. And so it's important that a founder leads it. And it's also important that they're able to unlock those warm introductions through their network, because it's also another really big signal of the credibility of a founder. And it's also important for the investor. They like to feel like they have sourced this opportunity through their network, because that's how it's come to them.
Okay.
So there's lots of reasons why they should go about leading it themselves. And if you know some of the secrets, then it doesn't take as much time.
I guess we could probably have a whole nother episode on that topic. But if anybody is interested, sort of early stage, that is thinking about fundraising, are you happy for them to reach out to you directly?
Yeah, absolutely. Yeah, probably via LinkedIn is probably the best way.
Great, good stuff.
But yeah, more than happy to have a chat with people.
Amazing. So final question, what is the one thing that you hope people take away from today?
So I think just to reposition this assumption that sustainability, social impact are costs for a business. when actually they are investments. And as a finance professional, I think you have a real opportunity to be, the person in your company who takes the lead in showing that actually, being better for people and being better for the planet can also be better for the bottom line. And there's huge impacts that you can then have by doing that. So I think whenever you hear about, your company exploring a new sustainability initiative or wanting to become a B Corp, think about how those costs could be flipped into investments.
Love that. Paul, thank you so much for joining me. It's been an absolute pleasure.
Yeah, thanks, Leo.
So thanks for listening to the Conscious Finance podcast. It's really appreciated. And if you can help us increase our impact and inspire others, it would be much appreciated. All we ask is just subscribe to the podcast, give us a like or drop us a comment. It really does help get the word out there and expand our reach and hopefully inspire others to drive their impact further. Thank you.